Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right, and there we go.
Hello, Bruce.
Happy Monday. We got a lot to cover. First things, the most important things first, the Mike Tyson fight. Oh my gosh. Was that a joke or what?
What a debacle. That was horrible. I don't know what was worse. I don't know if the service that Netflix didn't provide or the fight itself was the worst problem.
If they would have done us a bigger favor by just literally shutting down the entire Netflix and not letting us watch anything other than the two fights leading up to the fight.
They were very, very good fights, especially I've never really watched female boxing before. Holy cow, those two girls fought like you would not believe.
You don't want to mess with those girls, that's for sure. They were
Neither
brutal.
one of them.
Neither one of them. But the Mike Tyson fight, oh my God, what a joke that was. That was just a money grab. There was no fight there at all.
There was no fight. That is absolutely for certain. So, hey, I wanted to do something a little different today. I want to go ahead and check on some news.
Let's do it. Let's cover the news.
So I'm going to read a little bit of news. I'm going to summarize a little bit of news here. So national mortgage rates, the average interest rate for a 30-year fixed is at 6.99.
Call it 7%.
Let's call it 7%.
That means half the country will be 7 1/4, 7 3/8. Half the company might be 6 3/4.
Absolutely. And then a 15-year is up to 6.25. So that's a slight increase.
I'm not seeing a lot of people doing 15 years. Refinance to a 15-year when they drop.
It's tough. It's tough when house prices are as high as they are,
Yeah.
So refinances, nobody is refinancing. So,
as fate would have it, we still have a lot of refinances. I know that the statistics say that they're not, but I'm finding a lot of people that just need to refinance to pull cash out, debt consolidation. Think about this. If inflation got you and you are struggling to pay your bills, this is one piece of advice I've got for everybody. Don't be late. If you have to consolidate debt and do a refinance, do it before anything is late. Because once one payment's late, you could knock yourself right out and then you don't have a chance.
That's some really good advice. But correct me if I'm wrong. You are currently not advising anyone to refinance if they don't have to, right?
Correct. What I've done is I've put a watch list together for all my clients that say, hey, look at when the rate hits this, then call me. They're getting all their docs together. I've got the loan ready to go. We're holding off on an appraisal so we don't have an appraisal run out because I don't know if it's going to be a month, 6 months, or 18 months from now before that happens.
Gotcha.
But I can tell you that as optimistic as we've all been about interest rates dropping once the new administration got in, I don't think that's going to happen anytime soon. And I'm going to tell you why. Inflation is the arch enemy of the bond market. So that's what erodes the bond market, and that's what's driven interest rates up. So just keep in mind, even though the Feds cut the Fed rate, interest rates are up because bonds are down. We need bonds to be up.
Right.
Now,
absolutely.
If Trump stimulates the economy the way that all the experts are anticipating, that could be a negative reaction to inflation. Because if the economy is getting going again, then prices start to go up again, and we're back into an inflationary place, and that could cause interest rates to stay up.
Absolutely. And the other thing is, like it or not about the tariffs, if we do implement across the board or mostly across the board types of tariffs for a period of time, we will see pain and we will see some price increases just based on the fact that there's a tariff there. So
absolutely,
as that works its way through the economy, things may get better or not, but it will be an initial little bit of pain.
Well, I can tell you what's going to help people, because a 6.5% or a 7 1/4% rate don't make that much of a difference if you're making money. But when nobody's making any money and you're not seeing money circulated, then they feel the pain. If your income is good and your housing expenses come down, or your cost of living comes down a little bit, or your job is going so well that you got a promotion, then the higher interest rate won't be as much of an impact. But right now, when you have inflation and higher interest rates, people are going to go, I'm just going to wait for a while and see how this rides out.
Sure, sure. So I got some real estate news. That was mortgage news, right? So real estate news. I know this doesn't impact us directly, but the UK housing market saw a 1.4% dip in average asking prices in November. So
Right.
that's kind of an interesting thing, and we see that in November and December typically is a little bit lower prices because less people are looking, right?
That's a normal dip.
However, for 2025, they've predicted a 4% increase in prices, which is the highest rate that the UK has had in 4 years. So
that's a big 4% is a high price increase. Now we see that on a regular basis here.
Well, we do, and I think we're a little more cyclical than they are, and then we're also geographically different, right? So, as an example, Florida, even within Florida, if you look at different sections, so the regions on the southwest coast, right? So, like your Sarasota, your Punta Gorda, your Cape Coral, Fort Myers, those kinds of areas, they are having a significant decline in prices.
Isn't that interesting? So what now, if you heard that and you were a consumer, would that cause you to go, oh, wait, I'm going to hold off on that? Or is that a buying opportunity?
I think, obviously it all depends on where you are in your life and your home ownership journey. But it would definitely, if I was considering becoming a homeowner in one of those areas, I would at a minimum be getting ready, getting pre-approved. So if I find something that is a significant enough discount, I can go ahead and jump on it, because there are going to be people that are going to sell out quick. Now, on the flip side, the reason that they're selling, the biggest factors, according to this article, is number one, increased housing supply. So there's a lot more houses on the market.
More inventory on the market.
Number two, high insurance premiums. And number three, people are very afraid of the hurricanes that have come through and either damage things or hurt
the reason there's more inventory on the market. If interest rates come down, there'll be less inventory on the market. That's a direct correlation.
Absolutely.
So as soon as we have a rate reduction, you'll see the inventory relax and you'll see the prices start to go back up.
Yep. Now, I this is very anecdotal. I don't have an article in front of me on what I'm about to say, but a good friend of mine lives up in the Panhandle. And she says that there's a lot of people selling because their flood insurance is either non-renewable or it's gone from $5,000 or $6,000 just for flood up to $20,000 or $30,000 for flood.
I haven't seen that yet, but that could be devastating. But I thought flood was mandatory through FEMA, that they had to be able to provide flood insurance if you're in a flood zone.
So, and that might be true, but FEMA also is there's some guidelines around FEMA where your property has to be up to a certain standard. So if your property was recently hurt, but not enough for them to repay for you to have a new house, you have to rebuild that house to the new standard.
Right.
Which usually means in those places up on stilts. So now, instead of it being $100,000 or $150,000 fix, right now it's a $300,000 fix because you're raising the house up.
If not more. Yeah.
And so a lot of these people are just bailing, and they're taking a huge hit on their house that they might have bought for $1 million, $2 million.
Well, the way I look at it, if you go ahead and bail, you go ahead and bail on out. That's going to give people like you and I that are investors some buying opportunity. Absolutely. You want to bail on your beachfront house, then somebody will put a house on stilts up there and it'll be worth $3 million in 10 years.
Absolutely. So anyway, that's all I had. So, what do you got going on these days?
Well, as interest rates have climbed up again, I mean, I think that people are a little bit more reluctant. However, this weekend was super busy for us. We had a lot of new clients jumping in. I got a couple people looking at fourplexes right now. I've got some foreign national people that are not afraid to jump in this market. They see buying opportunity. So listen, you can't stick your head in a hole when the market changes. You have to look for opportunities in those markets. And every time there's like Warren Buffett says, Be fearful when others are greedy, and be greedy when others are fearful. Well, if people are fearful right now, what do you think the investors are? They're going to be greedy. So if
Yep.
you want to buy a good deal, you want a good deal, and you want to go down to Punta Gorda or Sarasota, then work out a good deal. You can probably pick up something for a bargain right now. So you always got to look at the bright side. There's always a way to make that happen.
Absolutely. Well, hey, Bruce, it's been a great afternoon talking to you, and I hope you have a great rest of your day or week.
And listen, don't forget, if you are in real estate, check out the Shoot Your Shot class that I went to last week with you. So if you want, put a post up on here so people can see this. If you're really trying to get your videos out in front of more people, you're trying to increase your business. Tom and I went to a seminar last week, and I think we need to share that with everybody and let them
Absolutely.
know what's available for that.
Yeah, I'll throw the link up